I think the biggest mistake people make when they first talk to me is they ask, what's the rate?
Yeah.
So it's a thing that we all are educated on. We know there's interest rates. Everywhere we look, there's interest rates and comparison rates. The challenge that we have is none of us really know what that means. So we know an interest rate low means I'm going to have lower payments. A higher interest rate, higher payments. But how the interest rate actually impacts the payments is the key part. And also, outside of the interest rates, what are the other costs added into the finance that aren't and don't have to be reflected in the rate that are going to make the overall cost a lot more.
Welcome to Get Invested on the Property Hub podcast channel, the leading weekly show to help you unlock your full self-health and wealth potential. I'm your host, Bushy Martin, and each week I go deep with the best investors, experts, leaders and founders to find out what it takes to break free from the grind, discover freedom and live by design. Subscribe now and join me and get invested in the life you really want. Let's get started. Hi, freedom fighters. Should you buy a vehicle with your hard-earned cash or consider a loan or a lease or some other alternative? The answer? It depends. It depends on the specifics of your situation and circumstance because there's no one-size-fits-all answer to any of this. Now, it's fair to say that we all love the look, feel and smell of a brand spanking new car, and it's easy to get caught up in the emotion of the moment and the FOMO when you're in the car yard and after taking it for a test drive, you've just got to have the car right here, right now. So you either splash your cash on the dash or you sign on the dotted line with the dealer's in-house finance team because the price being offered is always a special once-in-a-lifetime offer that's only going to be relevant today, and it's only going to cost you a few $100s a week to finance it, right? Wrong. Is it any wonder that, unfortunately, the car sales industry still suffers a bit of a challenging reputation? Just like I can continue to suggest that you need to paint it all out on paper and crunch the numbers before you buy a property, because the property is actually the last thing you need to look at, you need to adopt the same approach when it comes to securing a vehicle or any other equipment finance. So, should you pay cash or finance your vehicle or equipment purchase? This again is where the dual concepts of access versus ownership and opportunity cost that we touched on last week's episode come well and truly into play. And if it's better in your particular situation to finance it, do you take out a personal loan, a hire purchase, a lease, a novated lease, a chattel mortgage, or a lot of other alternatives? The truth is that in our time-poor world, asset finance is becoming increasingly more complex, confusing, and overwhelming. So to enable you to see the forest from the trees and better decide what's right for you and your circumstance, experienced and expert asset finance broker Michael Johnston from National Direct Finance joins us for part 2 of our great conversation. So welcome back to Get Invested, Michael.
Thanks, Bushy. Thanks for having me.
Mate, really looking to diving into this because it is an area that most of us know enough to be dangerous, being perfectly honest about it. So let's start with the obvious question. Why finance an asset versus buying it outright?
Yeah, I suppose the simple reason is it leaves money in the bank for you to use to do other things. And then ideally, if you're taking out finance, you've got some tax benefit for doing it. So that all works well if you're using a car for work or if you've got your business and you can write the car off. But some people don't. So there's other options there that we need to look at, such as novated leasing or operated leases and things like that. But ultimately, I guess it just comes down to whether or not if you're going to pay $50,000 or $30,000 for a car, would that $30,000 be used better somewhere else in conjunction with you taking out finance? So you also don't want to take out finance if you need to borrow money, and by taking that finance out is going to reduce your ability or your level of borrowing to do the investment or the income generating loan that you want to take out. But so matched properly and properly understood, then financing does make sense. Yeah. But yes, like you said, it's confusing and people will tell you a number of different things. And And like we said last episode, that if you're being transactional, then the person selling you that product only cares about that product and not you.
Yeah, yeah, beautifully said. So if we look at this whole area, then what's one asset finance idea that you think the majority of us get wrong?
I think the biggest mistake people make when they first talk to me is they ask, what's the rate?
Yeah.
So it's a thing that we all are educated on. We know there's interest rates. Everywhere we look, there's interest rates and comparison rates. And the challenge that we have is none of us really know what that means. So we know an interest rate low means I'm going to have lower payments. A higher interest rate, higher payments. But how the interest rate actually impacts the payments is the key part. And also, outside of the interest rates, what are the other costs added into the finance that aren't and don't have to be reflected in the rate that are going to make the overall cost a lot more. So sometimes people probably get a little bit miffed with us and a bit concerned that I'm trying to take them away from the interest rate conversation because that's what they know. But we're trying to educate people on understanding what the true cost is. So we say to people the interest rate is not what comes out of your bank account, money is. So let's just look at the overall money. Obviously, we'll always talk about interest rate. We'll declare the interest rate. We'll show the interest rates where a lot of people might do that, especially in commercial finance. But ultimately, it's about how much is it going to cost you opposed to the interest rate. You can't buy anything with an interest rate.
Absolutely. Very similar in the home loan environment where, banks and sadly a lot of brokers focus on the lowest rate. But when you look at the ingoing, ongoing, outgoing fees, and then the impact of offset accounts and other exercises that you can bring to the table to influence what the true bottom line cost is, you compare that on an apples for apples basis with other alternative, then suddenly you're having a very different conversation. And while rate is part of it, it is only part of it. So it sounds like it's very similar in the asset finance.
Yeah. Look, we work on the theory that the interest rate is probably the smallest part of the equation that you need to focus on. It's the one that has probably the least impact on payments. And that's assuming when you're talking about interest rates, you're talking maybe a difference of 2%. Yeah. Now, if you're talking 10% to 35%, then clearly straight up there's a difference.
Yeah.
But if you're trying to compare something that's a couple of percent apart, the lowest interest rate may not be the cheapest payment. So we need to make sure people understand that, and when they're compare the right things.
Yeah, and getting back to a true apples for apples comparison, so they're making more informed decisions. Are there any other mistakes that you see people making when it comes to asset finance?
Possibly financing the wrong way. And not exploring other ways that might be available to them. So, for instance, if you're with your employer and they offer a novated lease arrangement or salary sacrifice arrangement, then it's something you should explore with your employer. Some employers have arrangements with some of the big novated leasing companies and only will deal with them, and others, if they do support salary sacrificing, may give you the opportunity to explore whoever you want to go with. So more of the bigger organisations, the government organisations, they'll tend to be tied to a specific business that solely does that, and they'll do that for 100, 200 people.
Yeah.
Doesn't necessarily mean it's the best deal, but it's the best one you're going to get on salary sacrifice. And the benefit of salary sacrifice is just simply if you have no tax benefit for the vehicle, you're getting the tax benefit from a pre-tax. You're reducing your normal taxable income with the amount of that car payment. And then there's a few other bits that come into it and may or may not make it as beneficial as it could be, but it's certainly something to explore. But again, that comes with its own dangers and I won't say misrepresentations. But other areas that you need to make sure that you're clear on, and when you're comparing apples with apples, or when you think you're comparing apples with apples, you're actually understanding what it is that you're comparing. Because again, the waters can be muddied very, very easily. It's an area that not many people understand, so it's easy to be confused. And typically, as we pressed on at the end of last episode. People probably don't come out and tell you exactly what they think, because they feel like they might be made out to be silly or weak, and by asking the right questions, you can get around that and get the right result. But so people just need to be open and say, hey, I've got no idea.
Yeah, like I did with you. That's exactly the conversation. I remember the very first time we spoke, I can't remember exactly what I said, but I said, look, I've got no clue about this. Talk me through the pros and cons and the options so I can make a decision that I think is going to work. And I guess maybe I'm old and ugly enough not to care anymore, mate, because I think the only dumb question is the question you don't ask. And if I don't understand your answer, I'm going to keep asking you until I do get it.
And that's exactly the way to do it, mate. Yeah, no dumb questions, as they say. But no, look, I encourage people to ask a question, and even from our end as a broker, I encourage my brokers to ask a question that they won't necessarily like the answer to. So if we've got to say no, we can't do it, then no, we can't do it. Or should we be doing it?
Yes, that's a good one there. You touched on novated leases, and I know there's a whole raft of other different financing options. So can you talk us through what are the different types of finance that we can access in terms of assets, equipment, vehicles, and also talk to us about the best use case for each, if you don't mind.
Yeah, so without making it sound too complicated, so if we're a business that we're looking for finance for an asset, whether that could be machinery, could be a vehicle, could be if we're going down the path of business loans, we'll touch on that. But if we're talking asset alone, so it really varies on cash flow for the business, I think, which is the key part of what we always look for. Financing in an asset space can be quite easy to get at times if you tick certain boxes that meet requirements of lenders, which sometimes means you might not be getting the right product. We're going down a path of what's easy, not what's best.
Yeah.
But, motor vehicle finance is probably the biggest one that most people will come across, and different people. You could be a rep on the road that uses the car for work. You get a car allowance. That's a very common type of finance that we deal with. The benefit of it is the fact that you've got a vehicle that you're now going to be able to make some taxable claim on. You claim insurance, insurance, fuel, servicing, or your maintenance, anything you essentially spend on the car, you get to claim a percentage of your business use. So typically you've got to be over 50% business use, and then you get to claim anything above that amount. So that's a product that can suit a lot of people. The biggest mistake we see in that is people that get a car allowance and think that they can use their whole car allowance to be the full payment, which often they find that they're coming up short. It doesn't mean there's any less claim. Any money you spend out of your own pocket, you still get to claim. But where you might have had the car allowance and not the car allowance, if you've had a company car and then they put you on a car allowance, your company car side of things will give you the ability to essentially just run the car with no cost to you. People then get a car allowance and think, I've got $15,000 for a car allowance. They use all that $15,000 on the payments and then forget, hang on, I've got to pay for fuel, rego, insurance, maintenance. And whilst they get to claim it, it comes out of their post-tax income and means that they're going to have to reduce their spending somewhere else to cover the car. So that's probably the biggest trap we see with people with car allowances.
Yeah.
And some people accept the fact that they've got to pay extra out of pocket because they're buying the car they want. So it's a fair compromise. And as I say, you're still getting a tax deduction on it if your business uses enough.
Yeah.
So that's our core from an asset side, but then it's businesses that buy vehicles for rents, buying cars and trucks for on the road. Look, we've even gone out to doing helicopters and planes. Asset finance is that side that just gives you that tax deduction. And the difference, I suppose, if we're talking asset finance or a chattel mortgage for someone who's got business use to someone who has no business use and goes down the path of a salary sacrifice, at the end of the day, they probably wash up to be fairly similar to the point that, or the easy way to think about it, if you've got your car allowance and you're paying out of post-tax income, you're going to get your tax deduction come tax time.
Yeah.
Whereas if you're doing a salary sacrifice through novated lease, you're going to be making your tax deduction all the way through to tax time by way of a lower taxable income.
Yeah.
So the benefits can be quite similar, but some people have access to it and some don't.
Yeah. Okay. In terms of the initial deposit, the term of the finance, and then the balloon or the end payment at the end, are there any differences in the options that you've touched on?
Yeah, definitely. So consumer finance, not for business use, will generally go out, say, for a 7-year term, which again, if you're planning on keeping the car and let's say you have no tax benefit, this is just a luxury item that you're wanting to buy, you can use the consumer loan to finance your vehicle, say up to a 7-year term with no balloon, or from a 1 to 5 year term with the balloon. Deposits, generally, if you're a PAYG, aren't required unless it's down to the servicing piece. So much like a home loan, they're treating that exactly the same. So your income is greater than your expenses, and obviously expenses are meted by requirements that the lenders have. So even if we tell them we earn or we spend $1,000 a month to live, there's a tool in the background which they'll use as a fallback. But so you might think you can afford to do this, but government with their benefits or their buffers in protecting clients will suggest that you can't. So that's where a broker comes into it and gives you the opportunity to have those discussions before you apply for finance. So from a consumer space, then you can basically be as flexible as you like. It'll come down to payment. From a chattel mortgage point of view, again, it's cash flow for the business, but there are some rules in chattel mortgage that you can take out a low doc loan. That if you're asset backed, you may not need to put a deposit in. If you're not asset backed, you still might get that low doc loan if you meet the other requirements, but you might be required to put a 10 to 30% deposit down. And you're less controlled by cash flow or servicing on a commercial loan than you are a consumer loan.
Yeah, beautifully said. I can imagine that, and again, as I sort of touched on in the intro, a lot of people get caught up in the emotion of the moment, particularly when it comes to buying a vehicle, whether it be for the business or personal use. And I'd imagine the car yards are very good at applying that pressure and getting them to finance within the dealership rather than go to someone like yourself who can offer multiple options and multiple lenders to suit their exercise. What's your advice to anyone that's contemplating getting a vehicle in the short to medium term to avoid getting caught in that situation?
Buying a vehicle is a very emotive thing. So if it wasn't, we'd all be driving around in the same cars and same colour and not care about anything that other than getting A to B. So walking into a dealership and seeing the car of your dreams, even if it's not the car of the dreams, the car you want, ultimately deep down we're pinned in that we want that car. And if a dealership can make that easy, often all those things that we've educated on, all those things that we know are right, we kind of flick to the side because, hey, I can get this car and I can get it now. And I love it, and if I don't get it, someone else will get it.
Yeah.
So we like to slow that process down a little bit. And having been in the car game for a long time, being on that side of the fence, trained on that side of the fence, we know what they're trying to achieve and why they're trying to achieve it. If we can then take you out of that environment for a moment, just to slow it down, just to make sure you're getting the right thing, you might still go to the dealership. Now, just because we talk to you doesn't mean you'll go with us, and nor should you. But it gives you the ability to just double check what you're doing. Am I taking the finance out over the right period of time? How long am I going to keep the car for? And is the structure that I've been spoken to about by the dealership, is that really the right one that's going to suit me for the future? Where we like to take this is, what do you want to do? So yes, we'll do this car finance, but what do you want to do in 5 years' time or 3 years' time? Are you buying more property? Are you investing somewhere? Are you, do you have a wedding to pay for? Is it, what do you, outside of the car, what do you need to use this money for?
Yeah.
We see a lot of people take out finance and then they can't get a home loan.
Yeah.
Or vice versa, and so the key thing is just slow it down, look at what you're doing, and is this the right thing that's going to let you achieve what you want to achieve? You might be right, it might be fine, carry on, and if it's, we'll worry about your investments later. But that takes us back to what we spoke in the last episode of, maybe you need to be focused on the right things to get you to where you want to be in life. So we do it a little bit differently to some other brokers. We're not transactional. Why we work well with other businesses, other mortgage brokers, is the simple fact that we've got the client's best interest at heart, and we want to make sure that they can achieve what they want to achieve in the long run, not just buy the car.
I love that you're taking a much more strategic approach to looking at their overall situation so that you can see how this purchase fits into the overall context, and you're also pressure testing the options that they're considering in that time to make sure that they're doing what's really in their best interests, not necessarily what might be in the interest of the person who's trying to sell them the finance, which is a bit of a rarity, I've got to say, Michael, in the game, because there's a lot of what I call seagulls in that space that fly in SHIT and fly out, and you never hear from them again.
Take the easy option,
100%. So thank you for sharing that. Sort of looking at this whole area, then, is there one idea that a lot of the so-called experts in asset finance field say that you would disagree with?
I suppose my side of it's transparency. It's one of those pieces that we all like to think we're doing, and maybe we're leaning on the industry to introduce that or support that, but in reality we're not. We're still dealing with banks that have an interest in selling products, and no bank wants to be the leader, or no lender wants to be the leader in the space that says no. So transparency is a big one. I'm a big believer if we don't have to sell by deceit. So, and by that I mean, let's just tell people what it is. Let's not sell a product and hope nobody asks questions. And we know in our industry, like we touched on before, is that people don't really understand it. So I can tell you it's 5% and then sell it to you at 15%, and you've remembered 5%, and you're happy with the payment at 15%, and I'm exaggerating, but you're happy with the payment where I've told you, and you're happy with the rate that I've told you. So you think you're getting something you're not. And there's not a lot of protections in place for the consumer around that. And there could be, but the lenders are probably a little bit scared of and not all lenders, mind you, there are a couple out there that do have better disclosure than others, and probably my colleagues in the industry wouldn't like me saying it, but in reality, I think if we're all about trying to make sure we're doing the right thing by the client, and everyone knows you make money when you sell something, so we're rightly going to make money, but it's just if a customer knew how much money we were making, would they be happy to still use that person? So that's why I call selling by deceit. So I think that transparency is one of those pieces that there's always a bit of an argument in the industry, and no one really ever gets it right because they don't want to be the first. They don't want to be that leader that says, we're prepared to take a cut here to actually do the morally right thing to ensure that we stand well in the industry, because there's too much business to lose.
Yeah, am I right in saying that there's no duty of disclosure for anyone in asset finance to declare?
Commercial asset finance? No, that's right. Commercial asset finance. There's one or two lenders that do disclose it. There's one or two lenders that do disclose it, but make it hard to find. But overall, from a commercial contract, you'll find that the thing that everyone asks about, being interest rate, even though I'm saying interest rate's not the key, but the trigger to maybe people's discussion doesn't show anywhere. So, like I say, it's very easy for me to turn around and say one thing and give you another. You've heard, what we've told you here, and this part fits in the budget, so that's okay. But it's not what you think you're getting. So it's a really difficult point to deal with, and parts of the mortgage industry are dealing with it differently to the way the asset industry is working with it in the consumer space. But yeah, just transparency. I think we're just too scared to disclose everything out of fear of losing it.
I can see why a lot of, should we say, people in the asset finance game that have less integrity are going to push everything back to rate, because 5% of 10 grand versus 5% of 15 grand is a very different answer. But if they're only just bring it back to that percentage, then it avoids having to have that conversation to sort of open
Correct.
up to look a bit
We
beyond.
brought it back to the part the customer knows about, or thinks they know about, and
yes.
So it's easy to build confidence in that.
Yeah. So revolving around that, then, what are your best tips for us to actually improve asset financing outcomes when we step up to the block to try and secure that?
It's a challenge, because you don't know what you don't know, and those who are selling it often are a lot better at it than you, because we do it all day, every day. You might do this once every 3, 4, 5 years, and it would have changed in that time frame.
Yeah.
So it's very difficult for you to know. But I think, look, it's ask as many questions as you can, get as much information documented as you can, and then compare it and ask questions to somebody else. Anyone who's confident in what they're providing their customers is not going to have a concern with their customer sharing that information.
Yeah.
We all hate giving the competitor information to work with, because it's really easy to beat a competitor, because I just have to be cheaper than they are, and I've got the business. And again, you forget about what it is that you're trying to achieve, beyond that transaction. And that person may not have that same integrity or intent in what when they're selling your product.
Yeah.
So that's probably the challenge that you would face, is just getting the right information and understanding the information you're getting. There is no real one resource that anyone can go to, so it's really find a reputable person. Compare against, ask around, is the information I'm getting sounding right? And I don't mean going to the pub and asking the guy next to you, what rate did you get? Because that's typically where we get people coming back to us and saying, hey, my broker, my mate at the pub said he got it at 5% lower than what I got it. They haven't compared payments.
Yeah.
So 5% lower might actually have higher payments than the guy that paid more. So had a higher rate. But just try and get the right information. And so it really is using someone that you trust, making sure that their integrity is there. If they're prepared to answer all of your questions and give you the information and give it to you to be able to take away, then you would hope that you've got the right person.
Yeah, no, beautifully said, mate. So you've touched on some of this already, but given the enormous experience you've had in this area, what do you think separates a great asset finance broker from the rest?
Yeah, I think not being transactional. We said at the start it's complex and difficult, and it is for the consumer, but from our end it's not. So we would probably have 5 or 10 transactions only, if that makes sense. So everything we do fits within a certain type of transaction. Be people buying cars, and so many people fit into that same scenario. People buying trucks, businesses. So from our end, it's quite simple to be clear if we're doing the right thing by the client. So I keep coming back to that. I think that's probably where the good brokers are different to, and I don't necessarily mean the bad brokers don't make any money. They're probably just not the broker you want to work with. So not being transactional, making sure that we've got the full picture of what the client wants to do. I want to see the client be able to do what they want to do, get ahead in life. Because ultimately, if we're talking consumers with cars, we're just helping them buy a car.
Yeah.
It's not going to do any benefit in their life. Outside of the COVID times, it's not going to make them any money. So we really want to make sure that we have a lifelong relationship with our clients. And as I've done with you over time, and as I've done with multiple other clients, is that I want to finance them. I want to finance their family. I want to finance their children when their children become old enough to drive or finance vehicles. It might be to help them pay off a HECS debt. It might be, when someone's getting into business to organise and help with a business loan, and maybe even a business that's had lots of loans, and we're trying to get in and tidy that up to put them in a better position to move forward. So that's what we're looking for. And if we just do transaction after transaction, because we can, we're just not doing. We're not operating like I like to operate. And then it just comes down to making sure we've got products for clients. One business we used to work for, it had one lender ultimately. So customers are coming to a broker and we're ultimately just pumping it through that one lender. Now, thankfully, it was a good lender. So, it wasn't something negative, but a good broker has access to many lenders. They understand many lenders. And I think, like we said in last episode, just, be prepared to, from a broker's point of view, be prepared to give the client the product that may not be beneficial to me as the broker. Yes. It may not be the one I make the most money out of. Yeah. But if I do the right thing by my client, then they'll continue to come back.
They'll come back and they'll tell others, which is a really key part of that. So are there any key questions that we need to be asking an asset finance broker to help us separate the good from the bad?
I think the simple questions when you're looking for finance is the overall cost. What's the overall cost going to be? Yeah. That takes it away from the interest rate, but it'll turn around and show how much interest I'm actually paying. What fees are associated with the loan, both dealer and broker fees. And we all have fees. It's the broker fee that we put into the finance, which typically will get financed. Yep. The finance, it's our margin to a point, but it's what allows us to be able to support you through the whole term of the loan. It's what puts people at the end of the phone. It's what makes sure we've got the experts that keep going out and getting educated, have got the ability to be able to do so you get the right person to talk to and you get the right advice when you talk to them. So those fees are always there, but just look at them because they can vary dramatically. And again, some of the lenders are funny when they come out to you and say, look, we'll just increase for your benefit and we're going to allow you to charge an even higher fee to the customer. Whereas what they're doing is saying, well, we're not going to change our interest rate. So we're not going to adjust anything we do. But so you can make more money, we'll allow you to charge this higher fee. And I say fees in some cases, in many cases, are justifiable, but up to how much? So just because your lender's saying, yeah, you can charge it, should you? Do you really need to?
Yeah, and I think from listening to what you're sharing with us, the biggest suggestion I can make to anyone who's contemplating this is just to slow it down a little bit, because if you're getting caught up and excited about you've got to have this vehicle or something, you've got to have it yesterday, that's when you can sort of play lip service with the exercise and end up thinking you're getting a good deal, but actually being bitten in the backside in terms of the actual cost over time. And talking to someone like you as a trusted advisor who's going to share with us the various options, understand what our particular situation is, what we're trying to achieve, and how that sits in the context of everything else that's going to be happening in our lives is really important to be able to make sure then you're making a fully informed decision and selecting the right option that's ultimately going to give you the best outcome. So beautifully said.
Slow it down. Slow it down is probably the biggest key. Yeah.
So, Michael, where do we need to start with asset finance and what initial steps do we need to take before we race out and jump into this area?
Yeah, it's a case of, again, understanding what you want to do. Now, most consumers just know that it's monthly payment. So understand what it is that you're prepared to pay for something. If you're a mum and dad and you're going to buy a car, one of the biggest examples I can give you is someone will come to me and say, I want to buy a car for $40,000. But they don't have any idea of how much it's going to cost them.
Yeah.
So their budget might actually mean they can afford to spend more or comfortably buy the car they want to buy or actually not afford the car that they want to buy.
Yeah.
So it's more around how much can I justify each month and then what does that buy me?
Yeah.
And so kind of reverse engineer it. Now, you can't do that on your own. There are calculators you can go on, but the variables are so large that it's confusing. So, and unfortunately, in our space, that's probably a good place for us to be able to, or the industry, to manipulate things to get the result that they want to get out of it. So it's a tricky one, but again, going back to someone you trust. But the first step really is, how much do I want to spend per month? And as I say, there's varying different ways of doing that, whether it be the term that you finance it over, a deposit, a balloon payment at the end. So really, don't be fixed on what your mate told you. For years, we used to get phone calls, I want to do a 4-year term with a 40% balloon. Why do you want to do that? Because that's what my mate does. Okay. So again, it's that education piece. It's understanding what it is that you need to get out of this. Yeah. Do the homework to try and find out what that really means. Consumer finance, you are somewhat protected. So, it's a little bit better from the point of view of the process, that if the information is given to you right, you're able to manage that and be sure you're getting what you're being told to a degree. But really, just understand what you want. Business is a little bit different. It's often an asset that's going to be income generating. So we approach that in a little different way. And that might be around how much money is it going to make you? What's the life of the machine going to be worth? Or when does it start to stop being beneficial to you? When do we start to look at replacement? So do we set up the right type of finance, the right terms, put you in the right product that you might be able to pay out early with less penalties? So go down that path. But certainly from your mums and dads that are just out there to buy a car or a caravan or that boat, it's just a case of understanding what the budget says and then see, reverse engineer it to see what it is that you can buy.
Well, I think my takeaway from all that, Michael, is that for anyone who's considering financing any of your asset or equipment needs, just pick up the phone and give you a call, mate.
But I didn't want to say that all the way through. That was the easier answer to every question, was just call me. It probably sounds a bit arrogant, but that's it. It's look, we've been around for a long period of time. We've worked in most environments within the finance industry and with most types of people in the finance industry. So we've seen what we like, what we don't like, where we want to position ourselves, and how we want to relay that back to our clients. So we're here for the long haul. I don't drive a Ferrari for anyone interested. So it's not about making a truckload of money. That comes in time. But it's a case of just making sure we have a lot of clients that are happy and can trust what we do. So, pick up the phone.
No, love that. I'm now going to segue into the round 2 of the ambush exercise, where I give you the blindfold and the cigarette, Michael, and hit you with some quick questions. So first of those is, what's your favourite quote and why?
You know what? I'll write this down. Look, it's around be yourself. I'm going to get this right because I often muddle it up. Be yourself. No, I'll come back to it. You know what? Let me work on that one.
I can remember it.
You do remember it? No, I gave it.
It's a great Oscar Wilde one, mate, and I love it. It's be yourself because everyone else is already taken.
That's it. So I always stuff it up when someone asks me, but it's when I can sit down and work it out, it just resonates with today, and social media and the likes of it. So that's something that underpins me. So that's what I like.
Well, it talks to me about being genuine and authentic about who you are, and not trying to be someone else or trying to please everyone else or trying to tell people what they want to hear rather than what they need to hear. So it speaks volumes in that score. Let's switch back to the literary field for a minute then. What's the top book that you'd recommend that we read and why?
My book taste has changed dramatically. I don't read novels. I don't have a great imagination. So I always struggle to sit down and get involved in a book. It probably comes from high school days where we used to get the back of the VHS and read the blurb on it and put that into the review and hope we got a pass. But look, part of my outside of what I do in business is health and fitness and really sort of hooked onto that. So a lot of the stuff I enjoy reading about is these people that can do not unhuman things, but how do they drive themselves? So there's a guy called David Goggins.
Know him?
Know him? Yeah. And he comes out with some pretty funny one-liners. But he really, he's an ex-Marine. He does crazy ultra marathons, ultra triathlons. Just puts himself to the test every time he does something, and I love hearing how they do that. So he's got a couple of books. What is it called? Never Finish and Can't Hurt. And it's one I've got going at the moment, and between that and all the podcasts, but it's one that I love understanding why people do what they do. And things that don't make sense to me.
Yeah, the level of discipline and limitless belief and the resilience just to see something through, very inspirational and motivational.
Yeah, and I sometimes don't like the way sports brought into business because they are unrelated, but mindset is not. So, dig hard, try and do something that's uncomfortable, and it might pay off. So, that's the sort of stuff I'm getting into at the moment. But and again, podcasts just get in the way of, or not get in the way, but I enjoy the podcast because I can pick and choose and get little snippets out of everything I like. So podcasts now become so much more important.
Totally agree. 100% agree. Switching back into the investment arena for a minute then, what's both the worst and the best piece of investment advice that you've ever received?
No, the worst one was just do it because it worked for me. And again, entering into it without any knowledge. Yeah. The best bit of advice was probably to a point. Get into it, understand it, and don't be afraid of it. It's not that I've had anyone say and take it away from just doing one thing. It's the mindset around investment. Yeah. So just understand it, educate yourself around it, understand it, and don't be afraid to do it. And it's the old story. When's the right time to do it? It's now.
Every time you can.
And whenever you can. So that probably, as a broad brush, that's probably the best advice that anyone's given me, and it's probably taken me 10 years to do it too.
It's never too late to start, but it's never too late to start, but it's always too late to wait, mate. I reckon.
Yeah, I agree.
Last one on this exercise. What's a personal habit or a daily discipline that you use that's contributed most to your success today?
Yeah, like the Navy SEAL Goggins. It's about, and that's the outside of this, is separating work from or finding a separation from work, and even to a degree from family. So changing the things that are there and they're constant, that we know are always going to be there. And so I've gotten really heavily into fitness over the last few years. And that just gives me that drive. I get up 5 o'clock in the morning, go and go and train at 5:30, 6 o'clock. Do that. It doesn't have to be long, an hour and a half. I've found a good group of people that I like to train with, and that keeps that drive and accountability there. And that for me is my start of the day. So I get up and do that. I don't check my phone. I don't turn on emails. I make sure that part of my day is done before I do the bit that I know is sitting there waiting to happen. So that's probably, so, and that's turned around probably my business as well, to the fact that I'm not waking up thinking about it. I'm not going to sleep thinking about it. Now I'm waking up thinking, or if I wake up in the middle of the night and it's thinking, okay, it's not, geez, I've got to do that email. I've got to answer that phone call. I've got to do that. I'm thinking about what's the program I've got to do when I get there in the morning, and it just neutralises the brain. And for me, it's been a fantastic mental separation to actually give my business 100%.
Yeah, and I'm right with you. It sort of burns out any built-up aggression. It clears the head. It re-energizes, and you're ready for the day because you put the big rocks in and you feel like you've done something for yourself. So you're actually ready to take on the rest of the day.
And there's a whole lot of science behind it that suggests that's no matter what time of day you do it, but it's an important part of good mental health. So, we need it in business for ourselves or in your job. You just need to find that level. So yeah, that's a non-negotiable for me.
No, I love that,
to the
mate.
point, my wife makes me go now.
Yeah, it's great, mate. Because if we're going to last the long-term distance to become a marathon runner instead of a sprinter, I think it's absolutely crucial. So beautifully said. It sort of bring things gradually to a close now. If I ask you to get invested, what does that mean to you?
A couple of things. So get invested to me is get involved, be present, understand what you're doing and why you're doing something. So it doesn't necessarily mean go and get some investments. It doesn't mean spend your money there. It really is just being present, being in the moment, and understanding why you're going to do something and what you want to do. And I think if you don't have that clarity of being present, then you can't do those other things. So yeah, that to me is get invested, because ultimately the right thinking is going to put you in the right position and can get the right people around you. And you know, if making a secure financial future for yourself is what it takes, learn it, understand it, and be present with it so that you can make the right decisions on it.
Yeah, beautifully said, mate. To summarise the great conversations that we've had in this episode and the last one, what are your key takeaways and actions that we need to take?
Look, from a finance perspective, is call me. Yeah, that's it. Call me. No, look, it's just being able to try and understand and be confident to ask the questions that you need to ask to get the right result. And slow things down. Spend the time to understand what you're going to do. You know, if you're buying a car for $50,000, by the time you put interest in it, you spent $70,000. That's a big chunk of money. So take the time to fully understand why you're doing something, and then I think you can go into it more informed.
Yeah, beautifully said. Look, for those of us like myself that have been listening in and really resonated with everything that you've shared with us, Michael, how can they get more involved with you and call you as you've
call me? Yeah. So look, I don't know. Do we give out the mobile number, mate? Is that a safe thing to do? But otherwise, jump online. The phone number's online. nationaldirectfinance.com.au. You can come to our Facebook page, National Direct Finance, or even the new Facebook group that you're putting together, Bushy. I'll be on there to sort of keep an eye out for any inquiries, any questions that come through. But National Direct Finance, look us up. We'll certainly be able to have a chat to you and be more than happy to have a discussion that doesn't need to end up in a result right now. So if we can help and see you in the right direction, that's the game.
Yeah, and I extremely well said, and I really do recommend anyone who's even considering whether it be business or personal, whether it be vehicle or office equipment or other, before you do anything in that score, just pick up the phone, have a chat to Michael. I know from my own personal experience, having dealt with you for many years now, Michael, just how beneficial that has been, because I always feel I can share everything openly with you. You talk me through the options, the pros and cons, and allow me to ask enough questions to put myself in a place where I feel like I'm making a much better informed decision around this, and certainly that's proven to be the case with everything that you've helped myself and many of our clients out with over the years that we've referred you through to. So I really want to thank you for taking the time to share all of this wealth of wisdom. And as you've just mentioned, I really want to keep this conversation going. So anyone who's tuned into this and has some questions around this area, join and jump into our Property Hub Collective interactive Facebook community, where you can actually share your comments, your questions, and any queries that you might have around this. And Michael can respond along with other like-minded, hardworking Aussies. So I'm really want to thank you for spending your very generous time with us, and look forward to keeping the conversation going, Michael.
Thank you, mate. Appreciate the opportunity, and definitely there for anyone that wants more information.
Thanks, mate.
Thank you.
Thanks for tuning in to Get Invested on the Property Hub podcast channel, your home for property investment insights and inspiration. And don't leave yet until you've taken the next step towards living by design by getting my award-winning book, Get Invested, absolutely free when you sign up at knowhowproperty.com.au or bushymartin.com.au. And finally, make sure you subscribe to Property Hub to get your weekly dose of Get Invested inspiration, along with every episode of Realty Talk, Australia's leading property show for red-hot property investing news and insights, direct from industry leaders and influencers. Remember to always get invested in your knowledge, and I look forward to seeing you next time.